everyone. Hope all is well. I have a packed agenda today. I've actually got Ken Serini with me as well, and we are going to actually split today's presentation. And what I wanted to start off with is just to kind of give everyone a flavor for what we've been seeing. And I've got to share with you, we've been getting a ton of calls from advisors in the group that are really starting to have a lot of momentum in having CPAs join their practices within their alliance program. So it's exciting to hear, and Ken and I are here today to talk a little bit about how to actually utilize some leadership skills and some tools that we've created in order to help the CPA find opportunities to refer. So that is primarily what we're going to focus on today. Just some quick housekeeping. As everybody knows at this point, in order to ask a question, to simply use the send message feature, which is on the lower right side of the webinar, or you can utilize the raise hand feature. We're actually better off writing in your question, so if you don't mind, just use that send message feature. So from an agenda perspective, I'm going to spend a little time discussing what I call the readiness assessment model. So we're going to do a little leadership development, and what I want to do there is I want to actually tie in how I utilize this with CPAs. And I'll talk a little bit about that in a couple of minutes. I think it will be impactful, and it's a way for you to start to put your consultant hat on, if you will, and start to take that leadership role where the CPA can start to learn from you. Not only will it help you influence the CPA to take your advice and to do things the way that you ask them to, but it will also help them in leading their staff and just start to build some credibility, if you will, in you and what your abilities are to lead others. So I think you'll find that to be impactful. Some of the Ameriprise advisors on the line have probably seen some of this, but it's always good to have a refresher. And it's also, I think, very impactful to figure out how to actually tie that in to specifically working with the CPAs as a whole. In addition, on today's agenda, I'm going to go through a sample case analysis. And this is something that I'm going to suggest that you and the group consider to do with the CPA. So I'm going to run through it pretty quickly, but it's something that we've been able to use as a way to actually show and teach the CPA how to approach a particular client and where we can help. If you remember, Ken and I talk a little bit about the story when I'm in Ken's office, and he has a client who is thinking about, who just lost his job, and how if I weren't there, Ken would have just moved on and not talked about the 403B rollover that the client had. This is along those lines of really getting the CPA to look at each and every client to better understand how they can ultimately cross-sell financial planning services within their tax practice. So I'm going to handle that portion as well. And then lastly, Ken is going to actually go through the 1040. One of the things that I am aware of is that many advisors do not fully understand the lines of the 1040. And this is a very good way for you to learn how to talk the CPA language. And Ken's going to point out how he has been able to use the client's 1040 form as a way to ask the right questions and to find opportunities to introduce financial planning in a seamless way into conversation, which ultimately has helped Ken refer clients to me. And then if time permits, which honestly it may or may not today, because we have a lot to go through in this hour and 15 minutes or so, we'll open up the lines for Q&A, assuming we have that time. And if not, then obviously if you have any questions, you can always get in touch with me or Ken after the webinar. So with that, I wanted to talk a little bit about leadership development, and again, what I call the readiness assessment situational leadership model. And when you think about that for a minute, the readiness assessment model, I know when you look at this chart, it ultimately looks a little bit confusing. And before I go too deep into it, what I wanted to do is to just kind of explain to you how I use this with a CPA. So I want to first set the stage and say this is pretty much at a point where you are having your biweekly or your weekly interactions with the CPA. They've agreed to work with you in whatever capacity, whether it be a licensed revenue sharing capacity or whether it be in the capacity of just someone who would like to integrate financial services to do the right thing for their clients. And I'm going to use this as an example of how you can utilize this with the CPA. And as an example, we can use the subject of simply having the CPA give you a referral the right way. And what I'm going to do is I'm going to kind of paint you that picture of how you have that conversation with the CPA by using the readiness assessment model in such a way that the CPA will hopefully be able to understand why they need to take direction from you, okay? Why they might have a low readiness assessment to actually give you referrals. So before I go at it from that approach, I first want to give you the basic understanding of how the readiness assessment level works. So if you start at the box above, and the box above starts in the bottom right corner in the pink or red color there, when it says S1. And S1, in essence, basically is us ultimately determining the advisor or the CPA in this case, and it could be applied to a staff member, their ability to do a specific task. So the task that I was talking about before as an example was a task that was a CPA giving you a referral the right way. So when you're giving S1 leadership, what that means in English is you're being highly directive and you're being very low from a supportive behavior perspective. So if you look at the bottom right where it says D1, this is looking at how developed the CPA is. So when someone is considered to be D1, what it means in essence is that they have a low confidence and they have a high commitment. So a CPA who's just decided to integrate financial services into their practice, they're probably going to have fairly low ability or competency to give you a referral the right way. How to have the conversation, how to actually make the introduction, to ensure that they're sitting in the meeting with you, to ensure that they frame it out the right way, etc. So they are considered to have low confidence, but at that point they have a high commitment. And the reason I say they have a high commitment is because it's a new task, it's a new relationship. They're really excited about incorporating financial planning into their practice, but they really haven't done it successfully yet. So a lot of excitement, very low skill. D2 would refer to their development level, where when a CPA or an advisor or a staff person is considered D2, what that means in English is they're low to some competence. So what that means is that they do not necessarily have 100% competency at this point. They might possess some of the skill set, but not all the skill set. And generally speaking, during that period of time when they're considered D2, what's happened is they've had something negative happen. They've tried to give a referral, they've given out a business card, but the referral never called, or there was some resistance. So what happens is they start to have lower commitment level. Okay, and I know this is a little hard to grasp, but as you go through, there are a few slides, you'll get it by the time I'm done here, I promise. But when you have a low commitment level, it's because there's something lacking, and it might be confidence that's lacking, it might be commitment, it might be the understanding of why it's important, and I'll outline some of those things in a minute, but a CPA could be D2, and D2, again, is low to some competency level and having a low commitment. D3 is where their competency level is actually pretty high. So I would say that right now, Ken's sitting next to me, and he might disagree, but Ken lately, because I just asked him why he hasn't referred me in a while, is probably D3. So what I mean when I say that is he's moderate to high in competence. So he's done it before, he knows how to do it, but right now he has a variable commitment level. And the reason I say that is he didn't give me as many referrals as he should have. So maybe he's getting complacent, maybe he forgot why this is so important. He's smiling at me right now and now laughing. But there's a disconnect. He knows how to do it, but he's not really doing it just yet. D4, guys, is when you're high on both. You've got the skill, you know how to do it, and you're really excited and you're doing it successful. That's where we want to get all of these relationships. And what will happen, guys, is it's progressive, where almost everybody starts at D1, low on ability, high on motivation. They then get to a point where they've started to build some skill, but have now gotten a little nervous about it or uncomfortable, which is where they're in D2. So they're low at some competency about a specific task, but their commitment is wavering a little bit as well. And then what happens is over time we develop this individual to do it the right way. And what happens many times is they've gotten pretty strong with their competency, but the issue is that their commitment is variable. And then lastly, at certain stages, and this is where our job as good leaders is to keep them in that D4 quadrant, which is in essence where they are developed. They're ready to roll. They know how to do it. They see what's in it for them. They connect it, and they're doing it on a consistent basis. So although some of us have heard this before, trust me when I say CPAs do not understand this. They haven't seen this, and this is information that's highly impactful to share with the CPA. I'm going to teach you a little bit more how to use it. But if we go back up, so S1 would be considered high. This is the type of leadership that we're going to ultimately match with their development area. So if a CPA is D1, they're low competence, high commitment, my leadership style should be highly directive. I'm going to demonstrate what needs to be done, and I'm not going to be all that supportive. I'm going to tell you what to do. I'm going to show you how to do it, and I'm going to really kind of drill you and make sure that you follow to the T exactly what it is I want you to do. Okay, I'm going to demonstrate. I'm going to give you a script. I'm going to role play with you. I'm going to do all those things that are necessary. S2 would, again, we're matching their development ability here. So right now, if they're D2, which means they're low to some competence and they're a little low on commitment, I've got to coach them. It's still highly directive where I'm supporting them, I'm demonstrating, I'm really showing them what to do, but I'm also being very supportive in my behavior. So I'm checking in with them. I'm making sure that they know how to do it. I'm making sure that they're comfortable. I'm really holding their hand throughout the process and moving them slowly, step by step, to make sure that they're comfortable, and I'm not pushing them in a way that they're going to become uncomfortable and become turned off, because again, right now in that D2 quadrant, they're a little low on commitment for some reason. When we're S3 guys, we're supporting someone who is D3. That's my leadership style. So my leadership style needs to match where they are in their development trend here. So they are now competent, right? They know how to do it, but what they really are not doing is being committed on a full-time basis. They're not doing it, although they know how to. There's some reason that they're not doing it well. So I don't have to be so directive, as an example with Ken right now. I don't need to show Ken how to do it because he knows how to do it. I don't need to review the scripts. What I really need to do is be supportive to Ken. And I need to find out what it is with Ken, as an example, as to why he's not finding the time. He said a minute ago, as an example, that he's just been busy. So there's a disconnect where Ken right now believes that his time is more valuably spent on something other than working on incorporating financial planning into his tax practice. So I have to be highly supportive and really help Ken to get out of his own way so we can both get what we want. I need to tie it back to our business plan. I need to refresh Ken's memory about how good this has been for his clients and the profitability that it brings to his practice, so that I will reignite his enthusiasm and get him to be a little bit more engaged in the process. And S4, guys, is the best place to be. The problem is most of us treat all of our relationships, whether it be with staff, whether it be with clients, or whether it be with a CPA, using an S4 leadership model. And what an S4 leadership model is, it's low both. So I'm not giving a lot of direction, and I'm not giving a lot of support. I'm basically, if I happen to see Ken, I'm going to pat him on the back and tell him, hey, you're doing a great job, keep up the good work. That's about it. I'm not going to meet with him on a regular basis because he is already at a point where he is high on motivation and he is high on ability. Very, very few CPAs are going to ever be in that spot. So this probably is a little bit confusing to you guys, and as you kind of study this chart, and you guys will get an email with all the slides and be able to listen to this again, I again want you to think we're going to use the example, and what I would do with a CPA is I would say, as my relationship is building with Ken Cerini, the new CPA I'm working with, I would say something along the lines of this to Ken. Hey, Ken, this would be in a biweekly or weekly interaction. are you at all familiar with the readiness assessment model? I want to take a minute. I want to walk you through it because I think it would be helpful and impactful in your practice and how you lead your staff, your clients, and your team. But what I'd also like to do is talk about how we can use this readiness assessment to determine how ready you are to integrate financial services into your practice. And I want to take the example of how you actually would give me a referral once we've identified an appropriate candidate. And I would take this slide out and I would work on it much like I just walked you guys through a minute ago. And this might clear things up a little bit more, guys. When you talk about doing a readiness assessment, you have on the left side here what I will call competence, and on the right side you have what I will call commitment, right? So competence is your ability to do a task. So are you competent to refer me, to do it in the right way, to introduce the service, to ensure that you call and set the appointment up? Are you familiar with the scripts, et cetera, et cetera, et cetera? The commitment is really attaching what's in it for you. So to be competent, okay, and to be developed when it comes to a competency in any given task, you have to basically have 4 areas covered. And I use the acronym TRUE. So the first piece is T, which stands for training. Has the individual been trained to do the task? And this is the question I'd ask Ken. So I'd say, Ken, we're talking about referrals. Have I actually trained you? We've got to identify whether or not you're ready to refer the right way. Have I trained you how to properly give a referral? Yes. Do you know the script? Have you actually memorized the script? Yes. Have you delivered it successfully yet? Yes. Et cetera. So Ken is saying yes to those variables. Now, you may not have done these things with your CPA yet. This is what's going to allow you to get through to them by explaining this model to them as to why it's important that you're going to actually deliver that script and have them role play it and really make it so that it's there so it rolls off the tip of their tongue. The second piece is role perception. So the R in TRUE is role perception. Does the individual accept that it's part of their role to complete the task? So does the CPA understand that the expectation is that they have to be brilliant at giving me referrals by having it roll off their tongue in a way that they're comfortable doing it? Does the CPA understand that that's an expectation of them, that they need to actually do that? Okay, and you have to gauge whether or not they do. The third is understanding. So does that individual know what to do and how to do the task? Can they explain it? So does Ken, in this example, fully understand that the expectation is that on a weekly basis, he calls 3 of his clients, exactly what to say, how to say it, and ultimately deliver it in a positive way? Maybe he does or maybe he doesn't understand that that's his role. And then lastly is experience. Has the individual recently completed the task successfully? So if this is a CPA that's never called a client and suggested that they meet with a financial advisor and had the client agree, come in for a meeting, and ultimately become a client, and they probably have not been successful at that task. Now, in order for somebody, guys, to be competent at any particular task, all 4 of those variables, training, role perception, understanding, and experience, need to actually be present. So they have to have been successful and understand all 4 of these areas. If they've done that, they would then be considered to be high in competence. So Ken and I have been working together 8 years. I trained him to do it. He does it well. He understands that it's his role to complete the task. He gets that role perception, and he has the understanding of how to do it, and he's done it successfully. He's done it over 160 times successfully. So I can say that Ken is actually competent. So he would be high on the competence level when it comes to giving a referral. Now, if we talk about commitment, the acronym on the commitment side for you to remember it is DISC, D-I-S-C. So the D stands for desire. Does the individual have the desire to do the task? Well, Ken has exhibited the desire in the past, but I could share with you after this tax season, I think his desire might be lacking a little bit. So you have to check, does the CPA really get it? Are you just pushing the CPA to do this? Or does he or she really get the fact that by incorporating financial planning into their practice, it's good for the client and it's good for them? Are they just telling you it, or do they really get it? And that's what you've got to be asking the CPA. The I stands for incentive. Do they really get what's in it for them? Does the individual understand the benefit of completing the task successfully? Do they understand that they're going to help their clients, which is important, and they're going to grow their revenue stream, which is important? Do they get it? Do they believe it? And do they really see the incentive? The S stands for secure, or security. Is the individual secure in the fact that they can or will be able to complete the task successfully? You've got to gauge this properly, because CPAs, guys, are going to be nervous, in my example, about giving a referral. They, most of the time, until they've done it successfully a bunch of times, they're going to resist this, which means they're not secure. Although you may believe that they're confident, they've been trained, they understand their role perception, they have the understanding and the experience, they're not going to be secure until the experience is actually there and they've had the success in doing that. So you want to really identify that. Ken is secure, okay? Ken is secure because he's done it before. I know that he has the confidence in himself, which is the last piece here. C is confidence. Does the individual feel that they can succeed at the task? Okay, so again, there's something missing if I use Ken as an example. It's either the desire, the incentive, the security, or the confidence. So if I assess Ken, I know he's confident because he's done it before. I know he's secure. There's something missing. It's either desire, because Ken might believe right now that he has more important things on his plate, or it's the incentive. Maybe right now one extra client doesn't mean enough new revenue to Ken, so therefore he's not incented enough. So if he's missing, again, any 4 of these quadrants, or these criteria, I should say, he would be considered low on commitment. So if I go back before to the chart that we looked at before, what I would state is this. If I looked at Ken, Ken is S3, right? Ken knows how to do it. He's moderate to high confidence, but his commitment is variable. And what I need to do is I need to match my leadership style by being supportive. I've got to spend some time with Ken. I've got to find out why something is missing on the commitment side. Is it the desire? Is it the incentive? I don't think it's the security or the confidence. So I share this with you guys to give you the basis of a model that I've used for 15 years in my career. You could hopefully see how you can use this model on any task. I use the example of giving a referral. It could be on your staff's side, your staff's ability to write a financial plan, or to make a trade, or to properly prospect, to get CPAs in the door, as an example. You could take them through our CPA training program and understand where they're low, what their actually readiness level is, and then what you really need to do is match your leadership style to that particular readiness level. So one of the things that I'm going to ask everybody to do is to consider having a conversation with their CPA, that they are in a biweekly or weekly interaction, and take giving a referral as an example and present it to them as what you're really looking to do is to ultimately educate them about a leadership development tool that you use in your own practice and how it can help them in many facets of their business. And I'm not going to spend a lot of time here, but think about it this way, right? I'll use the first row here. Competence, the true disc. So if they're low on ability, but they're high on motivation, they're an enthusiastic beginner. And an enthusiastic beginner gets a leadership style that you're directing and being low supporting on an emotional level. You're basically saying, here's what you do, now I'm going to watch you do it. Or watch me, I'm going to demonstrate it, you're going to observe it, and then I'm going to watch him and have you confirm it. You could also be low ability, low motivation, right? Sort of a disillusioned learner, okay? Somebody who just got through the process, if you will, that they're starting to learn a little bit. They're not high on the competency level yet, but they've got commitment issues now. Now they're actually a little disillusioned because they tried to give you the first referral and the client said no, or they stuttered through the script, or they couldn't get the courage to do it. Here, our coaching style needs to be pretty direct, right? We need to be pretty direct. We need to be supportive of that advisor or that CPA, and really help them through this difficult period of time. So that ultimately they get to a point where they're high ability, right, and hopefully high motivation, which again is where we ultimately want everybody, where we can delegate. And then the third quadrant here, guys, is high ability, low motivation. That's Ken, right? Capable but cautious. Right now, I'm going to call you the double C, Serini. Capable but cautious, Serini. I think you guys are hopefully getting the idea. So for the sake of brevity here, I wanted to introduce this. I don't expect everybody to master it, but I am going to send you these slides, and I wanted to at least at a high level, I may do another full session on this if you guys have interest in it, but on a high level, give you guys an overall understanding of a tool that we use for readiness assessment and how you can ultimately utilize that in working with your CPAs. I do it with my CPAs, not with every CPA, but where I see somebody who will follow me and has a thirst for knowledge, I utilize it, and what I found is it helps them fully understand why they're not doing things, which ultimately helps them to move forward with your support. It also, we talk a lot, guys, about getting implied permission. It allows you to get implied permission, because what the CPA is doing is they're actually seeing how you approach things, which makes it a lot easier of a process for you to influence them in the direction that you want them to go. So I hope that was helpful. I'm going to switch gears here for a minute, real briefly. I'm not going to go too deep here because I want to make sure Ken has plenty of time to go through his piece here as well as talking about the 1040. So this, guys, everybody on this call, my belief is, should have the ability to do a case analysis with a client. Part of the learning process with the CPA, part of what we need to teach them in these weekly and biweekly interactions is how to think like a financial advisor, how to actually identify needs in tax client situations, and how to ultimately utilize that knowledge to get the CPA to us. So this is a simple case analysis that I use with CPAs. You can create your own on a loose leaf piece of paper, or better yet, you can actually ask a CPA to tell you about one of their clients that they know well so that you can go through your own case analysis. I'm just going to give you guys an example of how to approach it. It takes me 5 minutes or less, and then I'm going to turn it over to Ken. So Mr. and Mrs. Jones are 63 and 61 years old. Mr. Jones works for a local power company, and Mrs. Jones is a teacher. Their primary goal is to retire in 4 years. These are the questions that I'm going to ask the CPA. Tell me about Mr. and Mrs. Jones. How old are they? What do they do for a living? What are their primary goals? What's their risk tolerance, which for Mr. and Mrs. Jones is moderate. Their income right now is $92,000 for Mr. Jones and $110,000 for Mrs. Jones. All information a CPA should know. Pension projection. Mrs. Jones will have about a $60,000 pension at retirement. Mr. Jones has $345,000 in a 401k, which is 85% equities, 15% fixed income. Mrs. Jones has a 403b balance of 170, which is 80, should say 80-20, it says 80-15. Now the CPA might not know this, guys, but as you're asking these questions, you're going to impress the importance of why the CPA should know this. So you might say to Mr. and Mrs. Jones have a 401k balance. The CPA may say, I don't know. Or it looks like they're making contributions, but I don't know their balance. It's a way for us to show the CPA why knowing is important and why knowing how it's invested is important. Mr. Jones has an IRA at Fidelity with $210,000, which is 100% equities. They have joint non-qualified CDs at the bank worth $166,000 and a non-qualified brokerage account worth almost $500,000, which is 80% equities, 20% cash. They both have group life insurance 2 times earnings. They have group DI, and neither have long-term care. They have a mortgage on their home of $140,000 at an 8% interest rate, and their home is valued at approximately $1 million. So these are some of the questions that you want to open probe the CPA when you're looking at Mr. and Mrs. Jones' situation as an exercise to show the CPA how we can ultimately provide value. So I don't think I need to teach you guys this. 63 and 61 years old, primarily their entire account is 85% equity-based. They've got CDs, assuming at a low rate, that are taxable. They've got a joint brokerage account that's 80% equities. They have no life insurance once they retire. Neither have long-term care, an 8% interest rate. Hopefully you guys see where I'm going with that. Here are the opportunities. We need to do a retirement projection, potentially refinance that 8% mortgage rate, address wills, power of attorney, health care proxy, living wills, review CDs for tax implications, review the entire investment portfolio from a risk tolerance viewpoint. Looks like they're heavily weighted in equities for a moderate risk tolerance. Are they maximizing their qualified plan? Is there potential for in-service distributions? What pension option are they going to take? Is pension flexibility an option? Are they going to take a full or a survivor benefit? Long-term care, estate tax issues. Whoop, you guys get the idea. So, and there's much, much more that we could identify. So I don't want to spend a lot of time there, but I use it as an example. And again, we'll email you these slides. This is a tact, if you will, to take. As the CPA is getting to a point where they're saying, hey, you know what, John? I want to work together. I see value for the client. Assessing their readiness level to give referrals or to identify financial planning opportunities, taking them through something like I just went through, a case analysis, so they can actually see tangible evidence, if you will, of how we can help them do a better job for their client. Ultimately, we'll get them to a point where they become much better referrers to you. So that was a quick down and dirty case analysis. I may revisit these things in a little bit more detail, and what I'd like to do now is to turn things over to Ken and have Ken talk a little bit about how he's been able to utilize some of what I just mentioned, and then also the 1040 as a way to ultimately help find referral opportunities. So here's Kenny.
Hey, thanks, John. One of the things when I first started working with John, and as a CPA, I was very, very concerned with, making sure that the information I gathered and the preparing of the tax return was accurate. But I didn't really understand how to harvest information correctly so that I could utilize that information to help my clients beyond, again, just making sure that their tax return was complete and accurate. And one of the things that John did was help me to gain a better understanding of the tax return and better understanding of how I can utilize the tax return as a resource to both help my client and to, identify opportunities. And what I want to do today is spend a little bit of time going over the 1040 and kind of pointing out some places where I'm sure many of you are familiar with, but just some places where you can actually talk to the CPAs that you're working with and kind of take them through this process to help them to better understand how they can look at the 1040, how they can find opportunities within the 1040, because I think as you go through each and every line of the 1040, there are opportunities where a CPA can really get you guys involved and make a difference in their client situation. So I kind of threw up a 1040 here on the page, and you can see that this client happens to be, this is an older client. They have a little bit of taxable interest, a lot of tax-exempt interest, very large amount of dividends. They have some capital losses over the years that they're carrying forward. They have distributions from IRAs and pensions. They have Social Security benefits, and overall the total income for the John and Jane Doe is about $103,000. And they own properties where they're able to take off itemized deductions, and their overall tax burden for this client, if you look up on line 46, is about $5,024, and then they've made some payments and everything else. Really what I want to focus in on is how to look at each of the lines of the 1040 and what each of the lines of the 1040 mean and how we can uncover opportunities to bring the advisor in, and what I've done in terms of helping to look at this and bring John in certain situations. So if we start up at the very beginning, filing status. A lot of times when you look at a client, a change in filing status is a key point where you can look at and say, okay, here's an opportunity. If I have a client that went from single to married, I now have two people that I have to worry about. So are there new insurance needs that need to be considered now that I have a married couple instead of a single individual? Do I need to be worried about changing beneficiaries on pension plans, on wills, on life insurance policies if the individuals have life insurance policies? So these are all questions that the CPA can ask when they realize that there's been a change in filing status. So again, if I have a client now who was single and they got married, after I congratulate them, then the next step really is, so what are you doing from a will perspective? Do you have life insurance? Have you considered the need that now that you're married, you may have greater needs for life insurance and the like? And similarly, you could have a client that goes from being married to being single. And then the question comes down to, what are you doing from a divorce planning perspective? Have you considered all of those things? A lot of times you find out about those types of things even before they happen. I can tell you I have clients that come into my office and you can see the dynamics of the individuals while you're sitting down to do the return, or the clients will tell you that things aren't going well and that they're considering separation. So some of the clients will actually open up and talk to the CPA, and the CPA has to know that when that conversation comes up, that's an opportunity and they have to get you involved in that process. So changes in filing status are going to be the first place that you want to educate the CPA to look at and bring you into the mix. Second is dependents. If a client has a new child, again, that could mean additional insurance needs because you have to now worry about, taking care of that child throughout their lifetime, making sure that there's proper insurance to meet their college planning needs and everything else. If the client were to die prior to the child reaching the college age years. So again, more insurance needs, and that's a great opportunity. And also, when a new child is born, you have to start worrying about college planning right from the beginning. I can tell you I have 2 kids in college starting in September, and it's going to cost me between $80,000 and $100,000 a year for my 2 kids to attend college. So if I hadn't started doing college planning early on, it would have been a really, really tough time for me right now. So really what you want to do is you want to focus in with, or you want to get your CPAs to start focusing in on, getting involved in college planning as soon as they find out that their clients have had new children. Wages. So if you go to line 7 of the 1040, and I'm not going to bounce back and forth between the 1040 because it'll be a little bit tough to do, but if you pull out a 1040 in front of you, as not now, but when you're working with the CPA, line 7, wages. So the question that come up to me is, are you maximizing the pension contribution or allowable pension? A lot of times an employer will provide some sort of match to the pension plan, and the clients don't always take advantage of those matches, so that's something to keep in mind. And also, if they're not provided with a pension plan at work, that might be a great opportunity to establish an IRA or make IRA contributions. So those are things that you want to look at. Or again, if their income is low enough, they may be able to make IRA contributions. So that's something that a CPA should be focusing in on. As John mentioned earlier, the in-service distributions. So the question is, does their employer allow them to take pension distributions while they're still working for the company? That could be an opportunity. If there's been a change in employer, the question that the CPA should be asking is, what happened to the pension that existed at the old employer? That might be a great opportunity to have that pension rolled over into an IRA through you. So these are all things that you have to, again, start redirecting or getting your CPAs to start thinking about these types of things. We go on. Line 8A and B is interest. If you go back to that tax return I showed before, based on the level of interest that the taxpayer was receiving, the DOEs were receiving, they could have about $750,000 or more in cash. These are potential investable assets. They may be too conservative in their approach to investing. As John gave you an example before, where maybe the taxpayers were too aggressive, these taxpayers may actually be too conservative, and we may look to change the way these assets are invested. So you have to find out, where the assets are held, and try to get the CPA to get you the statement so that you can look at them and hopefully help to develop a better allocation of the assatu Tax-exempt interest. Is that the right answer for the client? As you saw in the case that we were working with, the client had about $102,000 worth of income, not a whole lot of taxable income at the end of the day. They ended up paying about $5,000 worth of tax, which is about 5% overall. If they can get a higher yield in a different type of investment than the tax-exempt may not necessarily be the right answer for them because their assets may be more productive elsewhere. And then if a client has new assets where all of a sudden you see a spike up in some level of income, you want to find out where those the accountant should find out where those new assets are coming from, because it could signify an inheritance or something like that.
Yeah, if I could just interject also, Ken, I have one CPA who was very good at referring this year, and he used that tax-exempt interest line sort of in the opposite way of what Ken was just saying. So most returns he saw had no tax-exempt interest, and there was a zero that went in there. And what he got really good at saying is, I'm surprised that you don't have any tax-exempt interest. Hasn't your financial advisor recommended or given you the option to determine whether or not tax-exempt funds make sense? And what would happen invariably is that would then spark a dialogue about the current financial advisor and that he or she have not suggested it, and that gave the CPA an opportunity to say, hey, I've got an advisor I work with who does a lot of work with tax-exempt investments. I'd love for you to meet with him. Would that be okay? So again, I just want to tie in, as Ken's doing a great job of explaining what each of these lines actually mean. It's our job to show the CPA how to use these lines and what Ken's teaching us about to ultimately have the CPA be able to raise doubt, right, or to be able to come up with inadequacies, if you will, or potential inadequacies of how the client is investing their money. I just wanted to kind of clarify that. Sorry.
Thanks, John. No problem. Thanks, John. Line 9 is dividends. If you have a client that has a large level, or accountant has a client that has a large level of dividends, it means that the individual could have significant investable assets. Again, what is the client investing in? And you could also have situations where a client may have large levels of dividends. We had a situation where we had a client whose husband had passed away, left her a large level of a pharmaceutical stock, and she had a large holding in that pharmaceutical stock. And because she had a large holding in that pharmaceutical stock, she was getting dividends on it, but there are potentially better ways to work with that. So if you look at the third bullet, large dividends from the same company could show concentration of risk, but it could also be a potential candidate for option strategies. So that's something that you want to kind of look at, and that's a place where CPAs, I'm telling you right now, are not focusing in on, and that's a good place where they can kind of shake the trees in terms of the advisors that they're working with. And again, if you have a client that has seen significant changes in dividends, that could be impacting stability or predictability of income streams, which is something that if you're dealing with an older individual where stability of income streams is extremely important, then again, it comes back to, is this the right investment option for the client or not? And the more options that the CPA can bring together, the more doubt that the CPA can show, provides more opportunity for you to get into the mix. Line 11 is alimony. When you're looking at alimony income, one of the things that I'd be interested in understanding, from a financial planning perspective, is when does the alimony end? And when it does, how is the taxpayer going to replace that lost income? So it's making sure that the client has a financial plan in place to ensure that once that alimony starts to go away, that there's going to be alternative revenue streams that are coming in that are going to make up for that loss in alimony income. Line 12 is income coming from a business, Schedule C. So if the taxpayer has their own business, the accountant should be working with that taxpayer not only to try to mitigate the income that's there for purposes of lowering taxes, but also identify opportunities. So does the taxpayer have a pension plan? Are they maximizing their contribution? And if so, can that plan be moved to you as the advisor? Do they have a business continuity plan or succession plan in place? Do they have employees that work for them? And could you do financial planning for the employees of the company? So again, it opens up all different opportunities there. If an individual owns their own business, what are they doing from a health insurance perspective? What are they doing from a disability perspective? What are they doing from a life insurance perspective? These are all things that the CPA should be exploring to get you guys in the door. Line 13 looks at capital gains and capital losses. If I've got large levels of capital gains, it could signify investable assets. One of the things that you may see, if you see, again, a spike up in the capital gains, or if a client's in and they're talking about a sale of a home and whether that sale of a home is going to create a taxable capital gain, again, that's a great opportunity because if you've got a home sale, that means you've got investable assets that the CPA should, be focusing in on as again, another opportunity to get you through the door. If you've got large levels of capital gains or large levels of equity-based stock, again, something John talked about before, could show improper segregation of assets based on the taxpayer's age. If you've got someone who's too heavily laden in equity-based investments as opposed to fixed-based investments based upon their age, that's an opportunity for the CPA to ask questions about it and say that it may not necessarily be the right mix for them, and again shed some doubt on the current financial advisor. And one of the things that I kind of threw in here also is a lot of times taxpayers focus on the donation of cash, but it might be better off for a taxpayer to actually donate appreciated stock and conserve the cash and utilize that cash for diversification of the portfolio. So if I've got a client that has a high level of or high concentration in a particular stock, by donating some of that stock that's maybe highly appreciated, the individual client would get the contribution for the fair market value of the stock without eating up cash, which helps to, again, diversify them a little more. So other opportunities to think about.
Hey guys, as simple as this may seem, when a CPA sees a large loss, and there's plenty of them out there, it's just a great time to say, I noticed you had a large capital loss last year. Tell me about what you're doing with your advisor. It's a larger loss than most of my clients have had. Are you getting the right advice? Tell me about who you're working with, because you might not be getting the right advice. These are the things we want to be teaching the CPA.
Go on to line 15A and 16A. Those deal with IRA and pension distributions. Again, if I've got a client that has pension distributions, the question is, how big is your pension assets, and is it possible that those assets would be better off rolled into an IRA or something where I can then direct them over to John so that there's more investable assets? Does a Roth conversion make sense? Has anybody gone through and done a calculation to see if a Roth conversion makes sense? We had a couple clients this year last year where the Roth conversion made sense for them to do. If a taxpayer has old annuities that could be rolled over into newer annuities, that may be an opportunity also, because the newer annuities may be a better fit for the needs of the client. So again, it's having the CPA ask the right question when talking to their clients.
Yeah, guys, this is another thing when Ken talks about the annuity piece of just simply having the CPA ask the question, do you know if your current annuities have living benefit riders, right? So most older annuities that we're going to see don't have living benefit riders, or the client won't know whether or not they will, which is a great way to have the CPA get you a meeting to actually analyze it for them. And that's what I want you guys to think of, is getting the CPA the easiest, simplest way, right, to use that tax return to introduce you into the relationship as the knowledgeable professional to comment on something.
Remember, for us as CPAs, going out and reaching out to a client and trying to get them in front of the advisor is outside of our comfort zone. So that's something that you want to try to do, is you want to try to make it as easy as possible to bring it back into that comfort zone. 1040 is a great way to do it because it's a form that we deal with on a regular basis. It's a form that we're very, very comfortable with. It's a form that we understand. So if we can find ways to utilize the 1040 as a way of directing traffic to the financial advisor that we're working with, it's a much easier and a much, from our perspective, a safer way of doing it. Line 17 deals with, comes from the Schedule E, which looks at rental income, partnership income, S corporations, and trusts. So these are flow-through entities that flow through from a business venture over to an individual. And some of the things that are here are very, very similar to what we looked at on the Schedule C. There's an opportunity maybe to invest the pension plan that the company has. In this case, though, in a partnership or a corporation, there could be other shareholders or other partners. So it also opens up the possibility for buy-sell agreements with partners and determining how those buy-sells are funded. Could be a way for additional life insurance. As I mentioned earlier, when you have a company, there's the possibility for health insurance, disability insurance, group term life insurances. Those are all good things to talk about. Is the accountant pursuing business returns and other shareholders? I mean, what may make sense is for you to kind of point out, as we mentioned in past conversations, accountants aren't necessarily the best marketers in the world. And if you can help the accountant not just identify opportunities to refer business to you, but also opportunities for them to refer business to themselves or grow their own practices, that's going to be a plus too. So if you have if a CPA has a client that has an interest in a flow-through entity, but they're not doing the tax return for the flow-through entity, maybe it's because the client didn't realize that the CPA did more than just personal tax returns and that the CPA does business returns too. A lot of times if you don't ask, you don't get. So it's really also just working with the CPA to better understand that there are other opportunities out there, and also maybe working with other shareholders of the company, because if the shareholder that we're working with can go back and talk to some of the other shareholders or some of the other partners of the company and refer us as CPAs, again, it could be additional business for the CPA. So if you can also, while you're helping get the CPA to direct traffic to you, if you can help show the CPA that they could grow their own business and teach them how to grow their own business also, that's going to make you much more of an invaluable resource. And the other thing is, one of the other things that flows through line 17 is trust and estate assets. And, the goal would be to try to get the management of those trust or estate assets so that you can pull those assets over to you. So those are all great things. In addition, when you're dealing with corporations, one of the things that you want to try to find out, if you do find that an individual has and I should have mentioned this, I apologize, back when I was looking at the W-2s, but if you have an individual who is a key member of management within a company, whether they be a CFO or CEO or any of those, and it's a fairly large company that has a lot of employees, what you could also do is you could also find out if there's an opportunity for you to get in and not just work with the pension plan of the company that they work with, but also maybe some of the other employees of the company. If you could come in and maybe do seminars for the employees or any of those types of things, it just creates more opportunities for the CPA to open up doors for you. Unemployment. If a taxpayer is collecting unemployment, is there an old pension plan from, again, as we talked about, if a person switches jobs, that might mean that there are old pension plans out there, but you're also in a situation where if the CPA picks up a client that's on unemployment, or the CPA picks up a client that goes on to unemployment, again, it's that whole discussion about old employers and whether there's the possibility of pension plans that are sitting out there. Other income. If you have a client that's showing gambling or lottery winnings, again, it could signify a new source of investable assets. Those are things that you want to gain an understanding of. And, I have several clients that have taken up gambling and seem to do well at it, and they're making $20,000 to $30,000 a year from gambling on top of their other income. So again, it creates additional investable income. Line 28 talks about self-employed SEPs and simple and qualified plans. So is the individual making qualified contributions to a pension plan for a business that they own or a business that they're a partner in? And if not, why? Where are the pension assets invested? These are all opportunities to get those assets over to you. And if the individual is older, are they taking advantage of catch-up provisions that exist within the pension plan so that they can make larger contributions to the plan? And again, as I mentioned earlier, you want to get an understanding of the nature of the employees that make up within the company and opportunities that exist in maybe working with the employees. So again, ways for you to work with your CPAs that you're partnering with to help them to get additional business. If they're working with the owner of a company, talking to the owner of the company about maybe coming in and preparing tax returns one day for the employees, again, it opens up an avenue for them to pick up more tax practice business.
Yeah, if I could just add there, Ken, one of the places where CPAs are generally not as educated as you would think they should be is on qualified plans for small businesses. So if you take some time to educate the CPA about benefits of things like solo 401ks or DB plans, solo DB plans, et cetera, that goes a long way, because a lot of times they have small business owner clients that might be contributing to a simple or to a step, where the reality is if they could put more money away if they were just educated on the different types of plans. And again, the opportunity there is for the CPA to say, hey, I notice you have a step. I work very closely with a financial advisor who specializes in small business retirement plans. He or she might be able to devise a plan that may be able to help us put more money away pre-tax, which will have you owe a lot less in taxes each year. Would it be okay if I conference call him or her in? Would it be okay if I set up a meeting for he or she to review your plan, et cetera, et cetera? So that's a real good place to start. And again, a lot of times the CPA's most important clients are going to have businesses, so you're going to see a lot of this. And we all know the benefit of having a client adding money to a SEP or some type of pension plan each year. So really, line 28 is an important line.
And if you're in an area where, or if you're working with a lot of the CPA is working with a lot of clients that are service business oriented, such as physician practices, lawyers, and stuff like that, we see a lot more of them when you do talk to them about DB plans. Get very, very interested because they're making large sums of money and they're trying to find ways to shelter more of that money, and the DB plan works very, very effectively in helping them to do that. So again, if you've got the CPA has a client that's in a service type business, which usually means a lot less employees and maybe higher margins, that's a great place for the DB plans to fit in. Continuing along, line 29 is self-employed health insurance deduction. Who's handling the health insurance? So there, as you know, there are many different types of health insurance that are out there. Health savings accounts, some new products that or new options that have come into play. So there might be some great opportunities there for advisors. Alimony paid, just on the other side when we're looking at alimony received, wanting to know when that ends. You want to know when that's going to end on the payment side too, because those dollars that are being used to pay alimony could be utilized as additional investment. So that's something that you want to look at. Line 32 looks at the IRA deduction. So I guess, again, the question is an IRA the best choice for the taxpayer? Should the taxpayer be looking at setting up a pension plan? We've seen some small business owners who have set up IRAs where, again, as John mentioned before, it's not necessarily the right option for them. What's the right type of IRA for them? Should they be going with a traditional IRA? Should it be a Roth IRA? So again, helping them to understand what's the better way to do it. And if the individual is older, should the individual be making or maximizing on catch-up provisions within the IRA? So, I mean, that's a kind of a quick summary of the 1040 and kind of taking you through the 1040 to kind of uncover opportunities.
Yeah, and guys, I just wanted to chime in real quick. This should give you the fuel to have, again, another dialogue with the CPA. So when you're in your weekly, bi-weekly meetings, great idea. Take these slides, go through it line by line with the CPA as a way to start teaching he or she how to find opportunities. And the couple that Ken and I zeroed in on are sort of no-brainers, right? When you talk about the small business retirement plan, line 28, when you look at whether there's major losses, et cetera, the interest line, I mean, some of those are no-brainers. And as long as you teach the CPA how to present it, how to position it in a way that they get a second opinion and that they're being sort of introduced as the expert. So the idea of today's call was to do a couple of things. And the first was to help you really understand what should be going on in these weekly and bi-weekly interactions, and to make sure that you are developing the CPA. You've heard me say a lot, you've got to become their consultant. When you go through leadership development and teach them something, when you actually go through a case study, when you actually go through the 1040 and help them actually identify these opportunities, you're teaching them. And that's going to be very valuable to them, which is going to make them more likely to follow your leadership as a whole. What I also wanted to do is, before we open up the Q&A, I wanted to give Ken a quick plug. I've noticed that not as many of you as I would have expected are utilizing Ken to actually go out and to, or I should say, to do conference calls and whatnot with CPAs that you're actually working with. And Ken has been unbelievably impactful in the handful that he has been doing for advisors. So I wanted Ken to take a minute and comment a little bit on what he does on those calls and maybe an example or two of kind of advisors you've been able to help. So I'm going to turn it back over to Ken, and then when Ken's done here, we're going to open up the Q&A. I see one or two questions it looks like that are already typed in. So if you have questions while Ken are speaking, again, bottom right of your screen, you can start typing in those questions for either Ken or I.
One thing I want to say just before I talk about some of the CPA interactions that I've had, part of the reason that we wanted to go through the 1040 now, and you would think that now maybe is the wrong time and maybe it should be done during tax season, but we find in our practice that a lot of our bigger clients are the ones that get put on extension. So CPAs are going to be preparing tax returns or continuing to prepare tax returns through the summer, right up through the middle of October. So there's going to be continued opportunity for for CPAs to be interacting with their tax clients. So I just wanted to make sure that was kind of brought up. Just a couple things in terms of what I've done with some of the CPAs I've talked to. One of the things that we find is that CPAs want to speak to other CPAs. I found that a lot of times, especially in working with some of the CPAs, either John has tried to work with or bring on board, as well as some of the CPAs of some of the advisors on the phone. I speak their language. I mean, I understand where they're coming from. I understand what their concerns are. I'm able to go through with them how we've dealt with the concerns, and I'm able to set them at ease a little bit more. They're not hearing it from someone who's trying to sell them. I've got nothing to sell them on. I'm just really just speaking their language and telling them that this really does work. It does make a lot of sense from a client perspective. It does make a lot of sense from their perspective. And they're able to understand that after speaking to me that this does work. And we're not a small firm. We're a 40-person firm, and one of the things that I find that sometimes they're impressed with the fact that I've been able to grow a practice to 40 people. Most of these are smaller firms that we've talked to, and because I've had the ability to grow a firm to 40 people, they've been pretty much happy with the fact that they're getting good advice from someone who's been there and done that. Again, we've explained what's worked for us. One of the things that I was on a call, I guess 2 or 3 days ago, and the CPA was asking me questions about, well, how do you go about doing the referrals? He was a little nervous because, again, it's outside of his comfort zone. We talked about having a client appreciation event and how that worked for us, and how I was able to get 60, 70 people in a room, and we were able to convert 15 to 20 clients fairly easily. We talked about how we can get clients through the door by asking them to, telling them that we were looking to work with a new advisor, and we want them to meet with the advisor and let us know what their feelings are. The 1040, the whole review of the 1040, is something I was talking to this advisor about, and how easy it is when you go through the 1040 to identify opportunities. As part of that, I also kind of talked to them where we fell flat on our face, so that they can understand that there are some challenges, but if they understand those challenges up front, it'll make it a lot easier for them to be successful in working in the relationship. Again, as I mentioned before, we talked about how to refer business. Again, that's one of the major questions that, actually there's 2 things. One, does it make sense for me to get involved? What's the right structure for me to do this? Is one of the big questions I get asked all the time. I get asked questions about, what about, and they bring up all of the concerns that I had when I first got involved, and I kind of talk to them about why those concerns, and kind of turn those concerns more into opportunities for them. And then the other question that I constantly get asked is, how do you go about making those referrals? Because typically CPAs have a tough time doing that. And finally, again, I'm there to be able to answer questions. So when they have questions and they're going through things and they're not sure, and they're maybe a little reticent to ask the questions of the advisor that they're working with, They feel a lot more open when it's just me and them on the phone, and they're able to ask questions. And I try to be as honest with them as I possibly can, to kind of let them know, again, what's the easy part of it, what's the harder part of it, how to make it successful, and just by telling them a little bit of my story also, and how we've been able to effectively do this and bring in over $100,000 a year from this, and how it's one of the most profitable parts of the practice and everything else. Those are all things that they help to bring them on board. I think we've had a very, very good track record in terms of working with the CPAs that we do work with.
With that, guys, we're like 6 or 7 minutes over here. And again, what I wanted to do today is give you guys a flavor for, once the CPA is engaged, some value that we can add in actually teaching them how to incorporate financial planning and become better leaders themselves. And I think that is it, guys. This is prime time, guys. I can tell you, I have Rick in the office. Rick, are we busy seeing CPAs?
Absolutely.
We're very busy right now in this office seeing CPAs. So they're out there. They're willing to meet. Make sure that you're running your SWAT groups. Don't lose momentum. Don't be discouraged. Remember, it's not a sprint, but it's a marathon. And, the next 6 months or so are prime time to be seeing a whole bunch of CPAs. So continued good luck with it, guys. Thanks, and have a good week. Bye-bye.